Good afternoon, ladies and gentlemen. Good afternoon, traders. I hope that you can see the slides. I hope that you can hear my voice. Welcome everybody to Money Market Matters webinar for 16th of December 2024, where we're here today to talk about how to make the most of the daily chart. It's Paul here. Well, as always with Money Market Matters, we'll start with taking a look at the news that we have available, and the education element today. We're going to talk about why is the daily chart so important, okay? What do traders need to consider, and how can they create a price action trading plan for the daily chart that allows you to operate on that particular time frame? And then, as always, if we have time, what we'll do is we'll switch across to the live markets. We'll have a little look at how the American markets are starting up as they open up in a few minutes' time. And I appreciate there's always some people new joining us at the start of their trading journey. Money Market Matters webinar is the regular webinar series with the aim to help traders start the week in the right frame as we prepare for the opening of the US markets. So every Monday, 2 o'clock London time, we take a look at the news coming for the week ahead. We have a major educational piece. We chat about the ActivTrades platforms and tools that you have available to you as a client. And then finally, we have a look at the live markets as we start the US session in about 25 minutes time. So there is always plenty for us to talk about, always plenty for us to discuss. You're always welcome to put forward your own thoughts, your own ideas, your own questions. If possible, if I can, I will always try and help you and try and answer you in our sessions here, and if not, we can find a way to have you access the resource that you require. Okay, as I always start with, we have a look at what's the news like for the week ahead. Now, those of you who joined us regularly, you'll hear me say it that if you are new to the trading journey, okay, if you're just at the start of your trading journey, I would not expect you to be able to analyze and understand all of the economic data, but it is important for you to know when that economic data is being released, because as it's released, it has the ability to induce volatility into the market. Volatility is a double-edged sword, all right? We need it for moves to occur, and when you're on the right side of volatility, that makes your trading session, enjoyable. When you're on the wrong side of volatility, that can make your trading session challenging. So it is in your best interest to understand when the economic data is being released. And you can do that by utilizing an economic calendar. There is an economic calendar on the ActivTrades website that you have access to and elsewhere on the internet. So there's no excuse not to be able to understand when the big major news is coming down the pipeline, okay, for the week ahead. So what have we got coming this week? Well, last week was a busy week. This week is also a very busy week news-wise. Really what you'll see is that this will be the kind of last week of major moves, major news before we take a small break, okay, for the kind of festive period. But what we've had today, all right, is there has been some Chinese data which has an impact on the Comdol currencies, but we also have had European, British, and now this afternoon, American services and manufacturing flash PMI numbers. Interestingly, we had the French, the German, and the UK numbers this morning. The French, German, and UK numbers. The manufacturing numbers were lower than expected, but it was offset by the services number being higher than expected, and that gives you an indication of the confidence and the state of those parts of those individual economies. And of course, people will be interested to see how that impacts the American data is like this afternoon, because we've got a lot of American data and British data coming out this week. But in particular, of course, people are going to be intrigued to see, what is the kind of economy that Mr. Trump will be inheriting in about a month's time from his inauguration, and people will want to get an idea, okay, of how that's likely to play out. We also have tomorrow, as I said, there's quite a lot of, this week is a very UK heavy data week. So we have first thing at 7 o'clock London time, we've got the UK unemployment rate, the sort of the jobs number. We also have the kind of, as it says, the German business climate, okay, the German ZEW economic sentiment index, which is an indication of the sort of overall business confidence. We have got Canadian inflation rate, okay, the CPI. We also have American retail sales and also a little bit of Australian and Japanese news as well. Then we get on to Wednesday, which in many ways is probably the sort of the prime day of the week. In the morning, first thing, we'll have the UK inflation rate, okay, 7 o'clock London time. People will be interested to see, you know, how that is coming. Is that continuing to fall, or is there or has it become a little bit sticky? But I think what most people are going to be interested in is Wednesday evening here for us in the UK and in Western Europe, but in the afternoon of the American session, what we will have is the American FOMC statement, their Federal Reserve's interest rate decision. Now, most people are expecting a 0.25% cut by the Americans. So, of course, if that differs in that there's no cut or a bigger cut, that will have an impact on volatility. But also, people will be interested to see, you know, what the actual statement is and the projections, because that will have an influence on people's view of the overall US economy. Then Thursday, okay, the next 24 hours from the start of the FOMC American rate, we have on Thursday morning, we are now expecting the Bank of Japan to have an interest rate decision. Now, there's a little bit of a mix, people. Most people are not expecting any change from the Bank of Japan, but once again, if there is a change, and in particular something like a rate hike from the Japanese, that will induce volatility into the markets. As you can see, you've got a bit of German consumer confidence, but you also have the UK Bank of England interest rate decision on Thursday lunchtime. And once again, the expectation in the forecast is that there will not be a cut from Mr. Bailey in the Bank of England. Hence why, you know, if there's any difference to that, or if there is a difference in the tone of the statement, traders will be interested to pick up on that. We also have, as you can see there, not only is the UK, but we've got US final GDP quarterly data from there, and as you said, the Japanese data as well. And then Friday, we've got retail sales in the UK. We've got retail sales in Canada, and then we also have in the US we have core PCE price index, personal consumer expenditure, which is the preferred indicator for Mr. Powell and the Federal Reserve to base their decisions upon how they're doing in their fight against inflation and what impact that might have on interest rates. So, as I said, quite a busy week. You know, the real kind of last busy week of 2024, I would suggest. So, invariably, an awful lot going on, and hence why, as I say, it's important to make sure you tap into that economic calendar on the ActivTrades website, so you're in a position to understand when all of this major data is coming out in front of your trading session. Okay, so we've had a little look at the news. So let's talk about educational element, okay, of our session today. As I said today, how to make best use of the daily chart. It would be interesting for me to ask those of you who are joining us for the live session here today, how many of you operate on the level of the daily chart? Maybe you use it for part of your analysis. Maybe you do all of your trading on the daily chart. Maybe you don't, because either you trade monthly charts or you're an intraday scalper on the 5-minute chart. It would just be interesting to know, for those of you here today, how many of you operate on the daily chart? Maybe it's for analysis, maybe it's all your execution. I'm just curious, and you could put that detail in your in the chat box. As I said, I'm always curious to find out how other people engage with markets. So Kester says, I use a daily chart for analysis. Absolutely fine. Absolutely superb, Kester. Hopefully there'll be something here a little bit that you can take away and utilize that will help you. The whole idea for our sessions just to help all traders just get a little bit better than you were yesterday. It's just a constant state of progression. Benjamin says, yes, I do. I use the daily chart for entry and analysis depending upon the pair. Fabulous. Thank you for that, Benjamin. All right. That's great. Great to know. Always interested to know how you use the daily charts. Okay. As I said, some people use them for analysis. Some people use them for entry. Some people use them for managing risk. Some people use them for understanding volatility. There's an awful lot of ways to use them, as we will talk about here for the rest of our session. But as the slide shows, I get to speak to lots of traders, all right, on forums, at conferences, with clients, etc. So I'm always fascinated and intrigued about how traders are operating and engaging in markets. The reality I find is that there are an awful lot of private retail traders who would love to be able to trade full time. However, they are constrained by their time availability. Okay, they're normally trading around a day job, or they are running businesses. They might be raising a family, or these days even they might be caring for parents, etc. So, what happens is they might wish to be able to trade full time, but the reality of their life is that that is challenging and it's difficult. So as it says, many people want to trade full time, but the reality is that it's not always feasible, and that's absolutely fine. Okay, that is absolutely fine. We all have various responsibilities, various commitments upon our time and our energy, and it's part of it is about finding a way to basically to be able to fulfill all of them, and yet also engage in markets, okay, and follow through with your trading. So not unsurprisingly, we want to talk about if that is a challenge that lots of traders have. Well, how do we solve this? Well, what could be a solution for us? And one of those solutions lies with just using daily charts. Okay, just using the daily charts. Now, lots of people use lots of different time frames, and that's absolutely fine. Lots of people like to use multiple time frames to do analysis on one chart and then execute on another. And that is absolutely fine, especially if you have the time to meld all of that analysis and that ability to engage with markets. But not everybody does. Okay, so how can we talk about a way that will basically just allow traders to do the majority of their analysis, okay, and at a quiet point of the weekend or at the start of the day, and then allow them to basically place trades and be in a mode where you are monitoring trades rarely, okay, or leaving trades to play out, almost like an element of set and forget trading. Because, as I said, if you've got lots of time commitments, okay, and other responsibilities, you might want to sit in front of the charts all day. But the reality is that it's unlikely to happen. As I said, that is absolutely fine, no problem with that whatsoever. It is a case of being able to find a way for us to work with it. And so the daily charts might be one way for us to do that. So let's have a little talk about that a little bit deeper. So, how do we use our daily charts? What are the different ways that we can use them? And it'd be interesting to know, as you said, I think we had Benjamin and Kestis and a couple of others saying that, they do use the daily charts. Well, how do you use them? Okay. What is it you're actually looking for? So, there are lots of ways we can use those daily charts, as in identifying the trend, identifying the direction, identifying the flow. Some people will also perhaps try and use them for kind of level 1 and 2 sort of elements of data, which is a little bit outside of our session today. But we can also use our daily chart for trade entries and for trade management. All right. So it is perfectly possible to just operate off the daily chart. And what we will very often find is that the daily chart is in many ways the most popular of the charts. The reason being is that we find we have the most eyeballs on that particular chart. What you'll see is that vast majority of, let's say, institutionals, whether they be using it for analysis or whether they're using it for actual trading, they will use that daily chart. Okay, and so for many people it is the most eyeballs on, and so what becomes important to us is that levels of support and resistance that operate on those levels, they are increasingly the most important ones. So with that in mind, how would we use the daily chart to basically, to effectively to operate in those markets. We're looking to use the daily charts to basically provide us with an element of trend trading, so where we can look to trade with clear trends, or where we can utilize the 50-period moving average for bounces off that moving average. And we'll talk more about that in a little bit later as we go deeper into our session. We can also use the daily chart for reversal trading, namely that when we find that the trend is overextended, when there is a clear reversal pattern, or we might even do something what's called the daily charts providing the flip, where we see very clearly markets flip from the downside to the upside, or whether they flip from being bullish to bearish. And once again, we can have a little look at that. And also, some people will look at in terms of using for short-term direction, in terms of using it for rejections off the monthly level, namely when you're using a swing or intraday opportunity. So even if you do have the opportunity to execute on lower time frames, well, then you can basically do that with a looking for monthly level rejections. And we're going to talk about that in a moment as an opportunity that traders can quickly identify as a way to operate in those markets. So even if it's just one chart like the daily chart, there are lots of different ways we can utilize it. And I'm just going to share with you a few of those different ways so that you're in a position to understand which one might resonate with you. Some people like to trade all sorts of different avenues. Some people like to trade both trends, they like to trade reversals, etc. Some people like to trade range-bound markets. What I'm going to do is share lots of different examples, and then hopefully you'll be able to identify which ones particularly work for yourself. So it'd be interesting, before we dig into the detail and the depth on that, it would be interesting to know, those of you who presently use the daily chart, even if it's just for analysis, how do you particularly use it? How do you particularly work with it so that, even for your analysis, are you looking to identify trends? Are you looking to identify range? Are you looking to identify opportunities on lower time frames? It would be interesting to know. Benjamin says that he uses it for support and resistance levels and trends. Absolutely fantastic, Benjamin. All right, fantastic. Thank you for sharing that. And you will find the vast majority of people will do so. Okay, the vast majority of people will do and operate in those particular ways, and that's great to know. Okay, and so interestingly, you've timed that very, very well, because this is what we're talking about in terms of our first tasks. So those of you who've joined us for our previous sessions, those of you who've joined us and talked about it, what you will have heard us talk about is how invariably what we're looking at is whenever we open a chart, our first task should be to make sure we draw horizontal support and resistance levels. And this time, we're going to use the daily chart, and we'll use fractals to help if required. And what we'll do is we'll switch across to the ActivTrades platform in a short while, and we'll just go through it. We'll just look at how we would do it on a day. Why are we drawing those levels in? Why do we always want to have them on our chart? Quite simple, right? I do not want to be buying into daily resistance, and I do not want to be selling into daily support levels. All right, and we'll look at that on the charts in a moment. As I said earlier, the daily chart gets the most eyeballs on it. So resistance and support levels on those time frames have the most validity. They become the self-fulfilling prophecy. And you might have identified a good trade setup, but as I said, we don't want to be buying into daily resistance. We don't want to be selling into support levels. Okay, so making sure that those levels are drawn onto our charts, making sure that we can visually see where those levels are, we don't forget them, and so we also sort of avoid that little, let's say, that first trap that many uneducated traders would fall into. However, we do want chances to trade reversals off support and resistance levels if that is something that works for us. It also provides us that big picture snapshot. As I've said a few times, the most eyeballs are looking at daily support and resistance levels. They have the most validity. They have the most use to you as a trader. Even if you analyze in the daily chart, but enter on lower time frames, which you could still do, the reality is daily support and resistance levels, they are the main levels, okay, and that's what we want to take on board and make sure that we cover that. So I've just got a few different examples, okay, dollar yen, okay, here, and really what I'm interested in is not only am I interested in where I can see significant levels, so the level is here. I'm interested because perhaps you can see there's a few fractals there, okay? There's a few fractals there, up fractals there, down fractals there, okay? There is, for whatever reason, there is clearly a level of support and resistance there. Sometimes it's abundantly clear why it's there. Other times it might not be, and that's okay. But if I'm seeing lots of rejections of an area, okay, of a level, and lots of support, well, then, of course, that draws my eyes towards it. What I'm also intrigued in, okay, is big round numbers. In, for example, dollar yen, 150, 140. Here I've got 130 as well. Because, as I said, we have the most eyes on it. And as I said, what we can see is that those things like big round numbers, they have a psychological impact and power to them. Human beings, as I said, look at those daily charts, we'll look at those big numbers, and quite a few of, let's say, institutions will just be looking at invariably moves between big round numbers. So, you're looking at treble zeros, or in the case of yen pairs, it could be double zeros or 4 zeros. Okay, so that's how we start our session. Okay, just even if it's just in the daily chart, just basically drawing in those levels of support and resistance. Now, what you'll find on most of my charts are always the same, as in I just have, as you can see, the little fractals there. I also have a blue 20 period simple moving average, a red 50 simple moving average, and a green 200 period moving average. And as we will see, I'm intrigued and interested by them, okay, because they themselves can act as dynamic levels of support resistance. In the same way, the horizontal levels are static. The dynamic ones is where we see how price reacts to things like moving averages, which are constantly moving and updating. So, as I said, start on the daily chart, just make sure you're drawing in those levels of support and resistance. That's task number one that we want to basically be engaging with. Task number two, okay? Let's start to look at some levels. Let's start to add in some extra bits of information or that areas of interest. Using the daily chart to project forward the highs and lows of the last 2 to 3 months. These are important, okay? And you will see that they can be enormously helpful to traders. So what you'll see here, so for example, you might be able to see it. I normally have just like a gold dotted line. And you'll find that, as I said, once you've identified where the highs, now on the daily chart, these vertical lines are the period separators for the months. So I can project forward the daily high, okay, or the daily lows. Okay, there's the daily lows. And what happens is once you start to draw them on your charts, you will start to be fascinated by seeing how does price react to those particular levels. Sometimes the markets may power right through them, okay? And if it does, well, that's the market telling you that there is a trend continuation happening. And if there's a trend continuation happening, why would I want to fight that? Okay, I don't want to fight the market. I want to ride the market. I want to surf the market as well as I can. Or what very often happens is markets may reject them. So, this was the low of the previous month. The price came down, it bounced, price came down, it messed around, but then it bounced. Here, this was the high of this month. The first time it came up to it, it literally bounced off it. That in itself is giving an indication of a trend reversal signal. That is all useful information. Or what you might see is markets may bounce and test them. Okay, so let's just clear some of these drawings down here. Here in this particular case, you can see how price was pivoting around the low of last month before it actually decided what it wanted to do. And if, as I said, if you wish to trade shorter time frames, well, lots of traders will trade those pivots around those particular levels. But this is what we're looking, as I said, trying to do. If it powers through them, that's trend continuation. If price rejects them, that's a trend reversal. Or, as I said, price might be pivoting around it, and as a shorter term trader, that might provide an opportunity. But for us, for today, for most of us, I'm just going to focus really kind of on markets may reject them for a reversal, or markets power through them for a trend continuation, and just keep it nice and simple. All right, don't overcomplicate it. I have to say this in all my years of trading, and as a man myself, I very often find men try to overcomplicate their trading patterns. I can't speak for female traders, but men, myself included, often overcomplicate your plan. And actually, the more you trade, the more you realize you just want to keep it simple. All right, just keep it simple. Don't try to overcomplicate it so that you're in a position to make good decisions. So that was task 2, ladies and gentlemen. All right, task 2, make sure you're drawing in those levels, projecting forward the highs and lows of the last 2 to 3 months. So here we go. As an example, this is from the DAX. Okay, so primarily most of my trading was on FX, but then also indices and commodities. But I wanted to just use this to just to give an example of how, remember what I was saying, most eyeballs are on the daily chart. Levels of daily charts get remembered very, very easily. So remember what I said, on a daily chart, these vertical dotted lines are the period separators for each month. So in this particular month here, this was the low on the first day of the year, and actually I projected it forward, and we were well above it. We stayed well above it for the first quarter of the year. That in itself is telling me something. But for yourselves, okay, what you're looking at is here. There was the high of that particular month. The low of this month was the actual, once again, the first day. But interestingly, when I project it forward, the first time we come anywhere near it, we look to bounce. This time we come right, we kind of pivot around it. The price looks like it's breaking out, but then it reverses and puts in what they call a 1, 2, 3 bottom before rallying up. Where does it rally up to? Well, it rallies up to the high of this month and the high of that month. When we project them forward, high that month, you project it forward. Well, what happens here? It rejects it. Okay, rejects it. All right. Where did it provide support? Well, the previous high from this month. Look at how it provided support. The high of that month provided all of that support. Okay, all of that support. So, as I said, just drawing in every time, looking forward, and just projecting forward levels. Once you start to do this and then make it habit, and it doesn't take very long at all right? And because of the MetaTrader platforms that you have access to with ActivTrades, MT5, MT4, there will undoubtedly be, indicators and stuff that you can actually probably purchase if you wish elsewhere, but it doesn't actually take too long, all right? To literally look at a daily chart, look at the highs and lows of each month and project it forward. And as I said, the more you do it, the more your eyes will be drawn towards actually how fascinating it is to find how prices maneuver and pivot around daily highs and lows and monthly highs and lows. It really does become quite fascinating. Okay, it's a beautiful insight into price action. And what I was looking at is if we went down into that chart just to give us an indication. All right, we've gone down to the hourly chart here on that DAX, and you can see we've drawn forward. Okay, the highs and lows from the previous month, but just look even on the hourly chart how price reacts to it. Okay, double bottoms, comes away, doesn't make it there, bounces off it. Here, there's a lot of pin bar rejection candles before it flies up. This is a 1, 2, 3 bottom before it flies up, bounces off there. Then it provides a very tight 1, 2, 3 bottom before it flies off. And then what happens is when it gets to near the highs, it rejects it. So as I said, just do yourself a little favor, okay? Just draw it in on a few of your favorite trading instruments. Draw in drawing the monthly highs and lows on the daily chart. And then, as I said, you might be fascinated to see how price reacts to it. It can be really quite an eye opener especially for new traders. So, the first task, remember, was to draw on horizontal levels of support resistance. The second task was to draw in levels, in particular, previous monthly highs and lows, and project them forward. And the third task, if possible, is to identify what's the kind of trend and market environment. Personally, all right, and this is my own trading, I like to trade with trends for longer term trades, okay? As an intraday trader, I like to trade reversals, but as a longer term trader, I actually like to see if I can trade with the trends. And as it says there, I prefer intraday mean reversion methods for intraday trading. So why is that important? Well, because it becomes important to know what market environment we're operating in. Is the market trending or is it consolidating? That's what we're always trying to work out and understand. Very often I find new traders, they overcomplicate this. They make it, hard on themselves. All right. I'm here to tell you, those of you who've joined us for many of our previous sessions will know that, I very often talk about how good trends leap off the chart at you, okay? If you have to force it, it probably isn't there. So I think this is what a Kiwi dollar doesn't really matter, because what it is identifying the price is in a downtrend there. Price, okay, is transitioning there. Price is in an uptrend there. Price then basically goes into a period of of consolidation. Yep, there's a little bit of move down. It looks like we're breaking out, but really it is moves within a trend. As I said, good trends leap off the chart at you. The challenge you have is that markets only tend to trend 20 to 30% of the time. So a lot of the time, markets can be like this. They can be range bound, they can be transitioning, they can be consolidating. As a new trader, if you find a trend like that, just ignore it. Move on to the next one. Don't try and fight the market. Think of yourself like a surfer on the ocean. You want to surf the best waves. And as I said, good trends leap off the chart. You don't try to fight them, all right? And if it's not leaping off the chart at you, it probably isn't there. So just move on and find a chart that is trending nicely. So just examples here. Pound against dollar. It's in a clear downtrend. It then basically flushes the lows. Okay, has a bit of a real exhaustion low, and then basically we get actually what becomes a very nice uptrend up to big round number, right, 120. And then, we start to look forward. We are in a period where we go in a range, and we can see this as a range here. But what is the highs and lows? Well, the highs and lows are the monthly high here, the monthly low here. Price comes up to it, and basically you can see it hits it, and it can't make it. It rolls over. Where does it fall down to? Well, it falls down to the monthly low before it basically rallies. And where does it rally to? It comes back up. Now, I just want to show examples about how we can see, on some charts, that the trends leap out, but also when we're going sideways, that's we can identify. And that's why I said project forward those highs and lows, okay, from the month on the daily chart, and you might be fascinated to see how price reacts to them. And it's just very simple, easy to do. It doesn't take much time to do. When you're just updating your chart at the weekend, and most of the time, you don't need to update it massively. Once you've done it first time, it's not a huge amount of workload for you. It's quite simple. And then really our fourth task is trade hunting. Okay, we're looking for opportunity. We're here to sort of turn our analysis into ideas. So the third task was all about identifying, are we trending or are we range bound? If the market's trending, I like to look for things like a moving average bounce, which remember we talked about in terms of moving averages acting as dynamic support resistance. Also things like an inside bar bounce, okay, that can be useful as part of a trend. Or for some people love to trade breakouts and trends. So let's just say we know that price never moves in a straight line, but even if it's in a chart, well, then actually some people would love when price breaks out to new highs. That is when they trade, okay? That is when they like to trade, when price breaks out, okay? Bang. Whereas other people like to trade a bounce, all right? As in price breaks out, it pulls back, it bounces and it goes. Price pulls back, bounces and it goes. And that's the that's my preferred, but lots of other people like to trade breakouts, and that's absolutely fine. What we can also use our analysis to identify is if the trend is old and overextended, okay, we can look for a reversal trade. But once again, only if abundantly clear. And if you're new to trading, by all means, try and see if you can identify trends that are old, but perhaps don't trade it to begin with, all right? Reversals take a little bit of experience. My suggestion is for new traders, find a trade market that's trending and then try to find a piece of that trend. So things like for reversal patterns, price action patterns, things like double tops and bottoms, triple tops and bottoms, head and shoulders, and inverse head and shoulders, they are all particularly valid. Interestingly, if a market is consolidating, okay, so it's going sideways, so let's just draw that in here. A bit like this, actually, well, a bit like this one here, really. Okay, and what we can look for is we can look for bounces or reversals off those levels. So I might use price action, things like a key reversal, an engulfing candle, or a star formation. If you don't know what they are, I've covered them in previous webinars. So what I would suggest is if you go to the ActivTrades webinar archive or the ActivTrades YouTube channel, you'll find that there are videos on there specifically focusing on key reversals, engulfing candles, star formations that can help you. Okay, so give you a little bit of homework there to take away. Seeing that, as I said, but also monthly highs and lows. How does price react there? So my eyes immediately drawn to this big blue rejection candle, a pin bar there at that previous monthly low as price has been going sideways. And then as you can see, price pops its way up there. And that's what I'm particularly looking for. Okay. That's what I'm always intrigued and interested in. So lots of different ways you can hunt for trades based upon what is that chart telling you, but also, what is your comfort level, what's your risk appetite, and also, what's your experience. As I said, if you're just starting out, look for trends, find a piece of the trend. It's only as you get experience that perhaps maybe you look for clear reversals or, price bouncing or reversing off things like monthly highs and lows. So, just an example, this is gold. Okay. So, I appreciate we have people who join us. Some people like to trade FX, some people like to trade indices, some people like to trade commodities, some people like to trade equities, some people like to trade fixed income, others would like to trade crypto. I appreciate we have a truly broad range of experience of people, what they want to touch. What we're talking about here, and this is what I'm always keen to share with people, is that where any ideas or concepts I share with you, they are always time frame and instrument agnostic. Okay, namely that they will work, wherever. Okay, that's what I want. And this, looking for how markets react to levels of support resistance is a key element here. So, I've just gone here through a period here, and you can probably see lots of. Hopefully, it's clear enough to see the gold projection forward of the price, the monthly highs and lows. And as I said, always fascinated. Okay, actually as to how prices played out. Price is in a trend here. Okay, until it gets to near to this level, and then it basically puts in a key reversal, and then it bounces way up. This is the 50-period moving average. There's also here lots of levels of support resistance. The price action there reverses before we get into our trend. Where does it come down to? A monthly high and low. Okay, it looks to pivot around there, but there's no real price action there, and then basically it drops a little bit, puts in a nice big bullish key reversal, runs up to that 50. Interestingly, that 50 level becomes the high of the month, which then becomes support here for that bullish key reversal pin bar. That big key reversal had been the low of the month, and that basically then becomes a level of support, okay, from which we have engulfing candles, rejection candles, etc. And then we can start to see, price here is above the 20, it's above the 50, it's finding support, working its way up there, just working its way up, and then we start to see price, rally its way. Where did it rally its way up to? Recent highs, okay, drops its way down. Where does it drop down to? Drops down to the low of that month, the low of the previous month, before it basically reverses itself and heads its way up. And where does it stop? Stops at longer term, big round number 2000. Okay, so clearly I've been doing this for a long time, and clearly I can just look at the chart and work my way through it. I appreciate if you're at the start of your journey that you might find that a little bit intimidating. But all I'm here to tell you is that I was once in your place. All right. The only way you get better is by practice, and the way you practice is spend a little bit of time at the weekend. As I said, if you can get a little bit of time at the weekend to just go through the charts of your favorite instruments and just draw those levels in. Just look at how price reacts, and once you start to study that, you start to become fascinated by how the markets react and actually how it offers opportunity for you if you are prepared and understand what we're actually looking for. So it'd be interesting to know for those of you joining us here who presently already use the daily charts, does this resonate with what you know and see yourself? Does it actually help just give a little bit of clarity? Does it help sort of just clear up your own particular checklist of operating? As I said, we're always fascinated to hear how individuals operate. Okay, it's we're all traders here. All right, that's regardless of how far along the journey are, it's always good to hear how others operate. So I've just got some examples here. Okay, so FTSE, all right, index, namely about how I look at that. There's a nice downtrend. Okay, there was the high of the month. What actually happened is this is the low of that month, and now when I project that forward, we bounced off it straight away. Next month, we came back down and tested it with a big bullish pin bar, which gave us that double bottom, and then we started to rally our way up. Okay, and we rallied up to that previous month's high. Then we pivoted around a bit, we kind of dropped our way down back to the 200 period moving average. We went back up. All right, we went back up, and actually then we broke. Remember what I was saying, if it breaks it, that's an indication of a trend continuation, and that's what happened for most of that month. We had that continuation. We pivoted around previous months. Okay, there was the low, and we continued to work our way up. Okay, we worked our way up until this month's high had turned right. It turned into support, resistance into support. And then once it broke through it, remember what he's saying, once you break through it on a strong candle like that, continuation, and we dropped all the way down. As I said, I do this all the time, so I can see that and work with it very quickly. But once you start to just follow that list, okay, just follow that little task list, okay, and just work your way through it slowly but surely. Simon says, yes, it's very helpful. I trade on daily chart and definitely swear by that. It's so important to take daily context into everyday analysis. Yeah, you're absolutely right, Simon. Okay, you're absolutely right. This is, as I said, you've got the most eyeballs on the daily chart. So these levels have their most potency on that level. And so, we're always looking to identify them so we can work with them. Euro dollar here again, here we go, lots of different examples. Okay, just wanted to use different examples of how interesting. Okay, for this month here, start of this month, the first day of the month was the low of the month. All right, the low of the month, and when price stays above it, that in itself is telling you something. When the next month it comes back down, all right, and then it reverses up. It looks like it's struggling a little bit at that recent high, and then we get a break through it. All right, we break through it, and off we go. Okay, and then when we break through this month's high, we break through it, but then the very next day we come back down, and that actually becomes the high of the entire month. And when that sort of starts to tell you, then you're breaking. Okay, and then we were working our way down. Okay, the low here becomes a low that's supported. All right, so we actually get a triple bottom there before price works its way up. And the good thing is, as I said, because it's a daily chart, you don't have to be sat in front of the screens all the time. You can do a lot of your analysis at the weekend and then just a little bit during the day, okay? It's not moving massively, but because you've drawn in these levels, you can project forward particular areas where markets will be of interest, okay? An area of interest, and you can almost like be there waiting, all right? Wait and see, how does price respond to these levels? How does it break through, which is telling me there's a continuation? Does it reverse off it, all right, which is telling me we are in a reverse, or does it pivot a little bit, okay? Does it sort of pause there? And that's absolutely fine. And as like I said earlier, the more you practice at it, the better you can become. Even oil, I think what I've tried to do here is just use all sorts of different charts from different instruments to show that, regardless of whether you want to trade FX into these commodities, okay, that you can actually do so, and that the idea and the concept is particularly right, namely making sure you're drawing on significant levels of support resistance, making sure that you are projecting forward, okay, the monthly highs and lows, and then looking at actually how does price react to them, okay? That monthly high, price comes up to it, prints a really big bearish key reversal, drops it down over the next few days. Where does it drop down to? Initially it drops to that level, looks like it's going to find support, but then it cracks through it, and then it basically goes on for the next few days. Okay, you're just seeing how price reacts at these levels. It becomes fascinating, right? It becomes absolutely fascinating, and The more you practice it, the better you get at it. It's like like hitting a golf ball. All right, hitting a golf ball, shooting a gun, driving a car. The baking a cake. The more you practice at it, okay, the better you become. And that's this is the Kiwi dollar that we looked at earlier. And I was just saying that we're just looking for good trends. All right, don't fight them, work with them, but then recognize also that we can go into ranges. All right, we can go into ranges, and very often those ranges are secured by the highs and lows of the monthly highs and lows. All right, and hence why it's always worth working with them. Okay, so just a couple of final points before we have a little look at the live charts. All right, remember there is no such thing as perfection. All right, at some point price will break out of a range bound market and start a new trend. That happens to everyone. All right, welcome to trading. Okay, but the way you look at it is it also means you've paid for information telling you that a new trend is starting. And what we've talked about here is if there's a new trend starting, well, then you just adapt to that. You look at a way to try and surf a new trend. Okay, find a way to trade bounces off moving averages or breakouts to new highs or lows, etc. That in a trend, that can be a way of operating. I've just given you just a simple checklist there, just to start and begin. But practice with that, work at it, and you will meld and develop it into your own best trading plan. So, in conclusion, before we switch across to the charts, the daily chart is a fabulous time frame for low maintenance position and swing trades. However, it is important for us to draw in significant levels of daily support and resistance, both horizontal levels of support resistance, but also big round numbers as well. It is also important for us to project forward monthly highs and lows, because how price reacts to them can be a fascinating opportunity. And also take a moment to identify the market environment. Okay, identify that market environment. Is it trending? Is it range bound? Is it transitioning from one environment to another? And once we have that idea, well, then we're in a position to either trade trends, reversals, and consolidations just off the daily chart. Okay, so with that in mind, I hope that's useful. That's given you some good, food for thought, something that you can take away and start to refine and utilize for yourselves. But let's also check them out on live markets. Let's see what's been going on with now the American market has opened. Before we do, just a reminder, okay, that Money Market Matters webinar will be here next week, okay? It'll be the last one, okay, of 2024. And of course, what we're going to talk about is about building a trading plan for 2025. So it gives an opportunity to bring a nice close to 2024 and then look to move it forward in 2025. So I hope you'll join us for that, 2:00 London time next Monday. Either register on the ActivTrades website or use the QR code to be able to join us, and I hope you will. And also remember that our webinars, okay, these are recorded and they will find some of them on the webinar archive on the ActivTrades website, and others will be uploaded to the ActivTrades YouTube channel. You can find us there. Make sure that you like and subscribe, and you'll be reminded when these recorded videos are uploaded there. So let's switch across to the live charts, have a little look at what's been going on. But as always, okay, if you've got any questions or comments or feedback or topics that you'd like to see me, cover in future sessions, you can do so. Okay, you can email englishdesk@activetrades.com, and they'll be very happy to help guide you. So if you just bear with me a moment, let's switch across to the charts and see what's going on. So just bear with me one moment. Okay, so I am hoping that you can still hear me. I'm hoping you can see the chart. The charts are the ActivTrades platform, okay, and what I'm looking at and interested in here is this is a dollar profile, right? This is where I start off, okay, and it is my US dollar profile. Those of you who join us regularly will see it there. Okay, so I've got dollar index, dollar yen, dollar CAD, Kiwi dollar, Aussie dollar, Euro dollar, pound against US dollar, and US dollar against Swiss franc. I've got them all on the daily chart. And what that allows me to do is very quickly take a snapshot of, if the trend, what is the US dollar doing? I can see that, for the most part, the US dollar index has been in an uptrend there. So that means the dollar has been strengthening. That is confirmed to me because Aussie dollar is in a downtrend. So that's showing Aussie weakness, dollar strength. Kiwi dollar is in a downtrend. That is Kiwi dollar weakness, US dollar strength. Euro dollar has been in a downtrend. That is Euro weakness, US dollar strength. Dollar Canadian has been in a rise, which means dollar strength, Canadian dollar weakness. We've had dollar against Japanese yen. Okay, that is dollar strength, Japanese yen weakness. We've had dollar Swiss franc rising. That is dollar strength, Swiss franc weakness. For the most part, we have had basically sterling working down there. Okay, and that is basically pound weakness, dollar strength. So invariably, that is kind of it's fascinating there, isn't it? As I said, it's just a quick snapshot that allows you to basically to take, again, understanding of the dollar. And if you're trading FX pairs, that's a great place, a great way for us to actually start. Okay, it's a good place for us to start. And remember, we want to identify what is the trading environment, because we don't want to fight it. We want to work with it, don't we? So let's just hopefully that has just helped giving you a little quick idea of what we're particularly looking forward for. Okay, so we want to basically work with that number. Okay, work with it, understand it. Okay, and place that as a way for us to operate. So let us just bear with me. Just what I'm going to do is I'm just going to bang. We're going to just bring up some charts here, and what I'm going to do is, remember what I was saying, is that let's just draw in our levels. So this is the daily chart. I'm just going to start here. Bang. Let me just come on. Let's just. Yeah, as I said, I like to normally have those colours. You'll generally tend to find I have them as a gold. All right, just gold dotted line. It doesn't mean you have to have it that way. It's just it's just what I do, because I have lots of charts going on. And as I said, we can just draw those in. Okay, there's a good example there. Okay, how we had where we had the lows of this month. Okay, look at how we came back the next month. We couldn't break it at all. What's that telling me now? That was also, we had the big round number here. Let me just draw this out. Let me draw these in first and stuff, and then I can make it a bit easier for you. So let's just month. There was the low of there. There was the high of that month. As I said, it doesn't take terribly long. It doesn't take terribly long to do. Okay, and once you're there, once you've identified it, it's perfectly fine. Okay, so that was a high there. That was the low of that month. That was the low of that month. That was the low of that month. Okay, so you start to sort of see levels. No surprise here that we had, this was the level for May, this was the level for June. No surprise that actually once price came down to it, you can see there was a bit of a pivot. It looked like it was going to break through, but actually it bounced off it until it had to be a little bit of a bear flag before we broke. But once it did break there, we really did get ourselves into that downtrend. As I said, if you look at this month here, August, the lows of that just in front of the big round number 100. Well, what do you know? There's just further support, and then basically we bounced and broke our way out of it, because we can see here it's just bang. That was the high of that month. We broke out of it, and we were into that trend. We were careering our way up, pivoted a little in about the 200 period moving average, but then actually carried our way up, all the way up to these highs from June. Okay, and that's what we're just trying to work with and trying to understand. Okay, just understand those levels and see how we can operate with that. So as what we have been doing is euro against the US dollar. Euro against US dollar has been in a particular downtrend. Remember what I was saying is that when you do that, well, we're looking for price to pull back. Okay, prices to pull back in trends, and then find ways to basically engage with that. So earlier this month, what we were trading here earlier this month was bang, it's here. What we had is price had pulled its way back up, still in the downtrend, but then actually we had a nice bearish rejection candle, and we've just worked our way down there. Okay, just worked our way down, and that's us. Just now it's been a pretty strong trend, but a lot of that is in the last month with the US elections. But once again, it's just a case of when you're finding a trend, we don't want to fight it. We want to find ways to basically to work with it. Okay, so bang, dollar against Canadian dollar, we flushed there. Okay, we can see it flushed there. We had a nice pin bar. It looked like maybe it was rejecting, but actually, bosh, that has gone. That's continued. That's gone all the way through. That's what we are particularly sort of intrigued. We're intrigued and interested when we see it breaking through there like that. That is telling me that is still got, that trend is still working. That trend has still got plenty to go. So I want to be long dollar CAD. I don't want to be fighting it. Okay, I don't want to be trying to fight it. What I want to do is to basically to try and work with it. To try and find my way to operate in that particular area. Let's go down here. Pound against dollar. Let's just draw in some of these recent levels. Okay, this is one of my other chart packages. I've got so many different computers, so many different chart packages on. That's just where we operate. Here we go. Just as I said, it doesn't actually take that long. Once you get your eye in, you can very quickly get an understanding, all right, of where these levels are. Just bear with me 1 second. Here we go. Yeah. I'll get that. Okay, so interestingly, when I look at that, right, we had a big run number of 130. Okay, where the big solid blue line. First time we came up to it, we rejected it, bounced our way down. Okay, and then bounced off the 200 period moving average, came up to it, worked our way through it, and then turned it. Okay, this monthly high and 130, we flipped it. This has come back down into that area, and then basically it dropped its way, it's worked its way up there. And then when we first came back here, it looks like it's going to find support. Okay, it's just pivoting for a few days, but then what happens is it breaks through it, comes back and retests before actually it drops its way considerably down there. Okay, and then it comes back. This was the low of August. We came down to it, and we can see the price pivots a little bit before it flushes, double bottoms, and then out. But then once again, a bit like euro dollar. Dominant trend is still to the downside. This is the pullback, and then this was a case of basically buying dollar, shorting pound, shorting euro, shorting the others against that as price particularly dropped its way down there, because we knew that we still had that. The dominant trend was still that dollar strength, which is what we just saw on the when we looked at all of these charts as a snapshot. Okay, ladies and gentlemen, all right. All good things must come to an end, all right? So unfortunately, we've run out a little bit of time there, but I hope you found that session useful. I hope that's given you a little bit of insight into how you can use the daily chart. Thanks very much for joining. As I said, the last session of the year is next week on building a trading plan for 2025. I hope you will join us for that. In the meantime, remember what we looked at the news. There's an awful lot of news coming out this week, so make sure that you're managing risk, that you're on top of your analysis. I hope you all have a fabulous trading week, and I look forward to speaking to you next Monday. Take care and trade well, everybody. Cheers.